So the morning movers, there are a lot of big names here on Wall Street, on the move. Diane King Hall, host of Morning Movers here. We'll start off with Amazon, which had 2 price target cuts today.
They are, but what's interesting to note is these analysts are still bullish on Amazon, right? The price target cuts are just worries overall about the tariffs and the impact to the sector as a whole, tech sector, for instance. So Mizuho is slashing its price target on Amazon. It's now new price target, $255 a share. Previously, it had it at $285. It does again maintain an outperform rating on the stock. BofA lowering its price target to $225 from $257. So again, Mizuho's is $255, BofA is $225. BofA also reiterating its buy rating. Tariffs are essentially the main theme, the main factor that is affecting this. They cite the 2025 global factors as a key risk factor for both of them. That's Mizuho and Bank of America. Mizuho sees also they're a little bit worried about budget cuts from cloud customers. They're expecting to see budget cuts from 50% of cloud customers this year as companies essentially pause and reassess the broader economic impact. You know, you may see less capital deployed, and that could then affect, for instance, Amazon and AWS. We know AWS is a big revenue driver for Amazon. And then BofA calls these tariffs, this 2025 tariffs, as a, quote, potential new ball game for supply chains, because we could certainly see some supply chain shifting and disrupting and, you know, just higher costs, larger in scale, especially because of the tariffs and the back and forth between different countries. They think they'll be larger in scale, which they do appear that way compared to the previous round of tariffs that we saw in the first President Trump regime. So because right now, as you know, for the U.S. is more than 100%, China hitting back with those 84% tariffs. So big issues there. Also, cloud headwinds again. Mizuho still bullish on cloud computing, but they expect, again, this delay in that recovery and spending that we've seen as customers kind of try to navigate and figure out when does this all end, I suppose. So again, trimming their rating. They do think that Amazon has some cushion, some strength to, you know, kind of ride this out, and that they could have a buffer from some of the tariff impacts, so that, you know, that's why they are essentially still bullish. But they do expect that material cost inflation is still expected to hit these.
Look, and I wonder if Amazon can benefit, you know, if you don't have the likes of Shein and Temu and, you know, other things.
Point.
Maybe there could be some bright spots. Amazon Web Services continues to do well. Kathy Wood from ARC had noted that she bought NVIDIA and Amazon on Monday after the bell on the closing prices.
Absolutely. Look, if these are on some people's shopping list, there certainly could be entry points for these, especially given the pullback that we've seen in many of these players within the Mag 7. Because some would argue that, you know, look, you wanted to get in this now, and if you liked it at a certain price, this may be the price that, I mean, it's a discount now to where it has been, and given how high we were, especially in particular in the Mag 7. And again, with both of the analysts, they are still bullish, but they're re-rating those companies, the price targets, in the context of the current environment.
Yeah, and
so there's certainly upside from here for them.
Yeah, and I'll just finish the amount that Kathy Wood bought. For Amazon, she got $5.8 million worth, and for NVIDIA, $18 million. And it's worth noting that Amazon this week is now up for the week. Okay, I know it's only Wednesday, and so is NVIDIA. NVIDIA is up 6%. Amazon also higher. You have another name you're focusing on here, and that's Walmart. Reaffirming.
Yeah, reaffirming some guidance, and so it's getting a tailwind from this move. They've reaffirmed their first quarter sales guidance, and they've widened their range also for operating income growth. They essentially want to stay, you know, just flexible on pricing as they weigh the impact of tariffs. They're expecting sales growth to continue to be in line with their previous forecast of 3 to 4%. They had obviously indicating as such. They report earnings in May, actually. So they're also noting that their fiscal 2026 outlook still unchanged. They're projecting full year net sales will grow between 3 to 4%. Adjusted operating income, they're expecting that to increase between 3.5% to 5.5%. Now, the range of how these outcomes occur has broadened for them because of the tariffs. They caution that there's a less favorable category mix, higher casualty claims expenses, a quote from them, and then overall desire to maintain flexibility to invest adjust in price as the tariffs are implemented. We know that Walmart has been negotiating, especially when it comes to their supply chain and supply chain exposure. But I think the street likes that they're maintaining their guidance, especially in the context of, for instance, you had Delta reporting their earnings today and they pulled their full year guidance. That is understandable, obviously, in the face of tariffs and consumer pressure. But you can see, with regard to Walmart, them being more buffeted in this environment, especially if we have potential inflation. They've already got the high income consumer there. They'll probably continue to stay there.
Right, and they talk about consumer sentiment leading to more sales volatility, but reaffirming the guidance. And Walmart has often been the pick of our guests when they come on television. Last but not least, Ford downgraded this morning.
Yeah, it is. It's under pressure. No surprise there with the auto tariffs hitting that sector. So although Ford is less exposed to, say, compared to GM in terms of its manufacturing, it's about the parts, right? And so all of these car makers have exposure, including Tesla, when it comes to the parts that are sourced from overseas, right? And we know there's a 25% tariff set to hit parts as well. So Bernstein is downgrading Ford to underperform from a hold. His new price target is $7 a share. So that obviously signals some downside from here. Shares right now off by 5%. He's just citing higher costs and just the weakening consumer. Keep in mind earlier, the Bernstein had already gone after GM, saying they got gut punched by, or got, quote, punched by the tariff man. GM obviously has more exposure than Ford does, but it does still believe that there will be price pressure on Ford and that they may potentially have to pull back their dividend. But look, one of the things I do like that Ford is doing to kind of operate and navigate through this environment that I think could at least be a tailwind for some time, they're offering that employee discount. So you could certainly be to more than employees. So you or I could go in and get a Ford vehicle for a certain period of time, and that could certainly spike sales.
So they've downgraded now Ford to sell. They've had GM to a sell rating. Stellantis announced 900 layoffs. We'll continue to follow that story. Right now it's at 861. Diane King Hall, nice to see you. Thank you.